Welcome to the Corporate Financial Reporting. This presentation will provide an in-depth look at the key financial aspects of a company. We are Innovawealth, your financial consultancy partners dedicated to providing expert financial guidance and solutions. Meet our dedicated team: Jan Xavier Babatid, Nicole Ann Didandisi, Faye Galagaran, Geraldine Garcia, and Jason Jimena. Today, we'll be diving into the corporate financials of LBC Express Incorporated. Our presentation will cover the company overview and scale of operations, financial overview, economic analysis, market competitive analysis, and financial analysis and forecast. We will conclude by providing you with our findings, insights, and conclusion. Let us take a look at the company's overview and scale of operations. LBC was founded in 1945 as the Luzon Brokerage Company by Carlos Lingoy Araneta. It revolutionized Philippine logistics in 1973 by pioneering 24-hour door-to-door courier services. The company expanded to the U.S. in 1985, introducing the popular balikbayan box service for overseas Filipinos. By the 1990s, LBC had earned the title Hari ng Padala. The new millennium saw LBC achieve major corporate milestones, starting with its public listing in 2001. By 2005, it expanded its financial services to include bills payment and branch pickup. After restructuring in 2007, the company adopted the memorable slogan, "We like to move it." In 2013, it was formally listed as LBC Express Holdings Incorporated and expanded into e-commerce payment solutions. Today, LBC is the dominant market leader with over 1,300 domestic branches. LBC's vision is to be the access and delivery solutions provider of choice. Their mission is to link and bridge customers through their network and innovative solutions, embodying the brand promise of a friend who makes your day and the tagline, "We like to move it." The LBC company culture, known as the LBC Way, rests on the core values of humility, integrity, trust, and customer first. LBC's brand attributes center on three key areas: clarity, certainty, and convenience. LBC Express Incorporated Board of Directors includes Miguel Angel A. Camahart as chairman, along with several other esteemed directors, including independent directors Solita V. Delantar and Anthony Abad. The LBC Express Holdings management team is led by Miguel Angel A. Camahart as CEO and president, and includes key individuals in finance, legal, and compliance rules. LBC has a strong local footprint across the Philippines. Luzon boasts 574 branches and 67 warehouses, followed by Visayas and Mindanao with significant numbers of branches and hubs. Globally, LBC operates in 29 countries and employs over 11,000 people. They have a widespread presence in Europe, the Middle East, Oceania, Asia Pacific, and North America. LBC partners with 51 remittance partners, 180 billers, and 49 pay-collect partners, ensuring widespread service access both inbound and outbound. The corporate structure shows LBC Development Corporation as the primary owner, with LBC Express Holdings Incorporated and its numerous subsidiaries operating nationwide and internationally. LBC's conglomerate map illustrates its extensive network of wholly owned and partially owned subsidiaries, extending across various services and geographies. Moving on to LBC's financial overview. At a glance, logistics accounts for 97% of LBC's revenue, with retail and corporate segments. Money services contribute 3%, encompassing remittance and payment solutions. LBC achieved a significant profitable turnaround in the first half of 2025, reporting a net income of 181.3 million pesos, reversing the 190.9 million pesos net loss from the first half of 2024. This was achieved despite a slight decrease in service revenue to 6.98 billion pesos and a 3% rise in operating expenses. Revenue is overwhelmingly driven by logistics at 96.7%. Domestic operations account for 69.8% of revenue, with retail customers making up 61.4%. This performance demonstrates LBC's operational improvements and strategic adaptability to post-pandemic consumer needs. The company achieved a significant financial turnaround in the first half of 2025, reporting a net income after tax of 181 million pesos, which reversed the 191 million pesos net loss from the first half of 2024, a 195% swing. This profitability was driven by improved gross profit, resulting from efficiency and cost rationalization and a sharp reduction in non-operating charges. Total service revenue saw a minor 2% dip to 6.97 billion pesos. LBC's balance sheet for the first half of 2025 shows a structural improvement. Total assets declined 6% to 4.39 billion pesos, but this was offset by a favorable 5% decrease in total liabilities driven by settling payables. Consequently, shareholders' equity rose by a significant 11% to 1.86 billion peso year-on-year. The year-on-year comparison of 2024 versus 2023 shows a 1.50% decrease in service revenue due to soft demand in logistics and remittances. Cost increased due to LBC retiring assets from closed branches and facing higher expenses from depreciation, amortization, and lease payments. The year-on-year balance sheet comparison further indicates a stronger cash position compared to year 2023, but a decline in overall asset values. Financing costs and market revaluations have placed pressure on equity. As a summary, the company remains operational but is facing financial headwinds. LBC's profitability ratios for 2024 shows improved operational efficiency, with the gross profit margin rising from 21% to 22% and the operating margin increasing from 4% to 5%. However, this gain was entirely nullified by non-core factors, specifically higher interest expenses and foreign exchange or valuation losses. Consequently, the company's bottom line significantly deteriorated, causing the net profit margin to swing from a 1% profit in 2023 to a 1% net loss in 2024. LBC's liquidity ratios for 2024 show a concerning negative trend. Despite a stable current ratio of 0.66, the significant drops in both the acid test ratio from 0.66 to 0.50 and the cash ratio from 0.34 to 0.21 indicate a major shift away from cash and quick-turning assets. These low values confirm LBC operates with a substantial net working capital deficit, posing a material challenge to its short-term debt repayment capacity and financial flexibility. LBC's solvency profile indicates high leverage and risk. The company's strategy relies heavily on borrowing, confirmed by the 89% liabilities ratio and an extremely high equity multiplier of 8.55. While the debt coverage ratio improved slightly, its value remains dangerously low at 90%. Suggesting LBC may struggle to comfortably generate enough cash from operations to service its substantial debt burden. LBC's financial structure is defined by extreme leverage in 2024. The company is in a highly risk position, relying heavily on borrowing as shown by the high of 0.89 debt to asset ratio and the significant increase in the debt to equity ratio of 8.20. Now let's take a look at the economic analysis. Despite of a global slowdown, the Philippines is projected to grow at 5.5% to 5.6% in 2025, supported by a 1.5 trillion infrastructure push and 11.9% rise in government spending, a positive sign for LBC. Philippine GDP grew at 5.5% in Q2 of 2025, supported by government spending of positive 11.9%, while household consumption at positive 4.8% and investment positive 11.5%. Services and industry remain key contributors. Q2 growth was led by public administration at positive 12.8%, followed by financial services at positive 5.6% and trade at positive 5.1%. Let us delve into the competitive market analysis of the freight and logistics industry. The Philippines freight and logistics market is poised for strong growth, expanding from $15.26 billion in 2025 to $20.41 billion by 2030, and that's 5.99% CAGR. This is driven by the Build More program, liberalized foreign ownership rules, and rising e-commerce. While freight dominates, the courier, express, and parcel segment is forecasted to grow fastest at 6.89% CAGR. Globally, the market is also set to surge from $6.37 trillion to $8.13 trillion, and that's 4.99% CAGR. Fueled by booming e-commerce, infrastructure upgrades, and manufacturing reshoring trends. Asia Pacific is the largest and fastest growing global region. Let us dive into our financial analysis and forecast. Here are the assumptions and trend analysis used for the financial forecast, including revenue growth, cost of service, and operating expenses. LBC's historical revenue peak in 2021 before declining through 2024, the 2025 to 2029 forecast is one of the modest, stable growth, rising slightly from 14.3 billion pesos to 14.5 billion pesos based on a 0.32% historical CAGR. Logistics continues to be the overwhelming revenue driver, with money transfer contributing a small stable share. The forecast suggests a stable, mature business with sustained performance but limited rapid expansion. Gross profit recovered from a low of 2.9 billion pesos and a 19% margin in 2022 to reach 3.12 billion pesos with a 22% margin by 2024. The 2025 to 2029 forecast projects stable profitability, with gross profit inching up to 3.15 billion pesos while maintaining a consistent 22% margin. This stability suggests LBC has normalized its cost management post-COVID-19, pointing to a sustainable but flat growth outlook. Now let us look at LBC's income statement. LBC's historical financial data is marked by cost of sales, consuming 78% to 81% of revenue. The 2021 net income drop was due to high expenses and the CREATE law tax adjustments. The 2025 to 2029 forecast shows stability, with cost of sales remaining at 78% and gross profit margin sustaining 22%, pointing to tight margins and limited profitability. Historically, LBC's assets and liabilities stabilized after a 2022 peak. Stockholders' equity significantly declined to 1.7 billion pesos due to weaker profits. The 2025 to 2029 forecast projects stability, with assets and liabilities remaining steady. Equity is expected to hold around 2 billion pesos, indicating a shift toward a conservative and resilient financial position over rapid expansion. The graph illustrates LBC's 10-year cash flow trend, showing periods of fluctuation and recovery. The company started strong in 2020 with 5.2 billion pesos in net inflows, followed by a sharp decline and modest rebound in the succeeding years. From the 2025 projection onwards, cash flow is expected to remain positive but gradually decline, ending at around 2.44 billion pesos by 2029, indicating a slower pace of cash generation toward the end of the forecast period. Liquidity ratios declined through 2024 before a sharp rebound projected for 2025. However, all ratios like current, acid test, and cash are forecasted to gradually taper off from 2026 onward, with the cash ratio ending below 0.4 by 2029. This trend signals tightening liquidity and reduced short-term financial flexibility. The solvency ratios chart tracks LBC's debt coverage and liabilities from 2020 to 2029. Coverage dropped mid-decade and stays low, while liabilities remain high, peaking in 2025. These trends point to sustained financial strain and limited solvency. LBC's financial leverage ratios rise steadily through 2022, peaking sharply in 2025, especially debt to equity and asset to equity. This pattern suggests increasing reliance on debt financing mid-decade, followed by the gradual shift toward rebalancing the capital structure by the end of the decade. Activity ratio shows a dramatic increase in efficiency. Receivables turnover and asset turnover spiked sharply in 2024, hitting 13.82 and 3.25 respectively, up from steady early years. Though they ease slightly by 2029, the ratios remain strong, reflecting lasting gains in productivity and LBC's significantly improved ability to generate revenue from existing assets. From 2020 to 2029, LBC's profitability ratio shows gradual stabilization. The gross profit margin steadies at 0.22 from 2024 onward, while the operating margin levels at around 0.03, both pre-tax and net profit margins recover from early losses to near break-even, reflecting thin but improving profitability. We will now summarize our findings, insights, and conclusions. LBC's growth is hampered by volume stagnation and tense competition from regional and agile players like DHL, To-Go, JNT Express, Limited Innovations, and e-commerce pricing pressure. Profitability is constrained by thin margins and inconsistent earnings due to ongoing losses from volatility and asset impairments. Capital investment focuses on logistics infrastructures, digital platforms, and branch expansion. The company's performance is highly vulnerable to domestic economy, factors like OFW remittances, and macroeconomic volatility. While management maintains operational continuity and brand trust, they have been slow to adapt to digital disruption and necessary financial restructuring. LBC possesses strengths like resilient revenue and nationwide reach, but these are offset by critical weaknesses like persistent net losses and low equity base. Our investment recommendation is to hold. LBC lacks the momentum for a buy, but its operational resilience and brand strength do not warrant a sell. Hold is the prudent stance pending the implementation of key opportunities like digital transformation and cost restructuring. The following contents provide a deep dive into the business model canvas, historical and forecasted financials, and financial ratios, which serve as the foundation for analysis. Thank you for your time and attention. We are Innovawealth, innovating your future, securing your legacy.